Lee, the Institute's released guidance aimed at preparers, audit committees and auditors themselves for the financial year 2009. What are some of the key issues contained in this guidance?
There's three key issues that we brought focus to. First is around the concept of the going concern. Secondly, around impairment of assets. And thirdly, on the determination of fair value. So around going concern, it's primarily to heighten awareness and implications with the tightening of liquidity into the capital markets and how each of those participants in the financial reporting chain would need to consider that tightening of liquidity into the determination of whether an entity reporting is a going concern or not. In terms of impairment of assets, it's important that some categories are assessed closely to ensure that their carrying values are still reflective of the recoverable amounts inherent in those values. And if there's not, then there needs to be an assessment done of the potential write-down of those assets. So in particular, we brought some focus around assets such as intangible assets and other long-term types of assets. And thirdly is around the determination of fair value, which is at the moment, quite a controversial area. And that's really no more than the market has certainly tightened in terms of level of transactions. And fair value really works well when the market is active and plentiful of transactions. So we're really heightening that when the market is less active or virtually non-existent, how else does fair value be determined? And in those cases that there is clear and effective disclosure made within the financial statements.
Apart from those three key issues, are there any other issues that the business community needs to be aware of?
Probably in terms of accounting standards, it would be around disclosure of financial instruments. Again, that's a fairly new accounting standard that's been introduced, and there is some concern held by the regulators that the level of disclosure is very modest at this stage, or boilerplate as they would describe it. And we would certainly be encouraging all participants to ensure that the disclosure of financial instruments is done in a more robust and rigorous manner than what we've got at the moment.
Why is the 2009 year end more important than previous years?
I'm not sure I would describe it as more important, but I would say that 2009 is an extension of some of the economic conditions that we probably haven't seen in Australia for quite some time. And therefore, each reporting period as we've gone through the economic downturn and hopefully start moving to a point of recovery, we need to carefully consider those specific drivers of the economy and how they might actually feed into our financial reporting. So the key message here is the 2009 financial year end is a very different set of circumstances to those that people might have encountered in previous year ends. So the market's very fluid, and therefore for effective financial reporting, those involved in the financial reporting and auditing need to be carefully tuned to the change in evolution within the economic drivers.
What does the Institute have planned in this space over the coming months?
Certainly in two streams. In the first, in terms of financial reporting, two of our major areas we're dealing with is firstly around the introduction of what's called IFRS for SMEs, or the small to medium enterprises. So we'll be doing some work to assist with the implementation and the guidance for both practitioners and auditors in this space within Australia. And secondly, we will continue to produce the earlier guidance you've referred to on a 6-monthly basis to align with the half-year and yearly reporting cycles, because the Institute feels it's important that they're positioned in the forefront of providing guidance to all financial reporting.
What's your sense on the implications for business over the next 12 months?
There's probably three areas I would give some sense around. The first would be that whilst we are seeing some green shoots of recovery, albeit at a very early stage, there needs to be some focus of corporates back to ensuring relationships with finances are robust to ensure that you've got the right arrangements in place with your bankers, and extending it further to any key customers and also key suppliers to your organisation as well. So really trying to build that foundation of relationships on which your business should operate. The second area I'd indicate would be about communication to the market, to the capital markets. And clearly I think the market is expecting organisations to be as transparent and as realistic in its communications, not only to comply with the law, but also to give a true indication of how the organisation is positioning its strategies and looking forward as the economy starts to develop. And the third, for those organisations that are fortunate enough to have strong cash supplies, would be to certainly look closely at any opportunities in terms of takeovers or mergers with organisations that might be in similar or competitive businesses to the ones they currently operate in.
How does broad-based business reporting relate to the current economic environment?
Broad-based business reporting is an initiative developed by the Institute in recent months, and we feel it's an important component of that transparency to the investor community, and I would describe it as an essential building block of communication by the corporate community back to investors.